Hey Abdullah, how you doing, man?
Doing good, brother.
Pretty good. So, like we've done with Mode, the whole idea about this is to introduce my team members, my partners, the people that I love to work with, and like I always call you guys, my tribe. You're our mortgage advisor. You're our mortgage partner. Why did you get into this in the first place? I just want people to know who you are, what do you do, and why. The floor is yours.
So, Ahmed, thank you first of all for having me on and working with me. But basically, like I was working in finance before this,
All
right?
right.
So I was dealing with people, who are getting insurances. They were getting, investing their money so they can grow that money, and I was also doing commercial loans on the side as well. So what I was basically, financing trucks, trailers. I was giving out business loans, and this was around the time when COVID started. So the mortgage rates were very low. I was basically sending a lot of these business owners to some of the mortgage brokers that I was working with because the spread of interest rate was just way too much. It made more sense for them to just refinance their home,
Mm-hmm.
save some money, take some equity out to keep their business afloat. I did that for a couple of months, and then I realized, like, hey, what am I doing here? I could be a mortgage broker myself. So I got into the industry,
Mm-hmm.
right? Got into the industry because I see so many people losing an insane amount of money because they're not getting the right sort of education. I had a lot of clients come to me who wanted to break their mortgage and refinance it so they could have a lower monthly payment, but they weren't able to do that because their penalties were so high.
Mm-hmm.
So basically, my job is to work with first-time home buyers, first-time investors, people who are looking to like refinance for the first time, people who are looking to just see how they can save a little more money every single month and how they can use their money to make more money on top of that.
All
That's why
right.
my mortgages. I love talking to people. I'm a numbers guy and I'm a people's guy. So mortgages was the right place for me to go to.
Well, listen, that's one of the reasons we partner up. I always like to tell people the story of your very, very interesting cold call. Like, I'm not gonna ruin it. Actually, let's talk about that. Do you want to give us like a minute about your cold call techniques that either makes people love you or really, really hate you? But so far, nobody has hated on you. But yeah, go ahead. It's really interesting.
It is really interesting. I got it from the UK's most hated sales trainer. And the way I start my cold calls is, hey, Ahmed, you're going to absolutely hate me, but this is a cold call. So you could either hang up now or give me 30 seconds and then decide.
And what's
What
the
was your reaction to that?
my reaction? Listen, how long have we been working together? We've been working together for some time now. Actually, I don't even count. But honestly, you got me caught. Like the moment you did that and you said you have two options, you either hang up or you just listen. Like, okay, this guy's different. This guy's different. Let me listen to him. And I'm actually really happy that I listened to you. I love the approach that you take to that business, and you touched on it when you were introducing yourself. You like to educate your clients. You like because of the situation, uh, because of the general situation in the market. Most of the clients are maybe not in the best position with the way their mortgages are in terms of rates, etc. Now, how do you educate your clients? If you can tell us more about what's the process that you take, or the journey that you take your clients towards.
That's a very good question. So basically, Ahmed, before I can start educating my clients, I have to first educate myself on the client. So what I mean by that is I really need to understand what the clients are truly looking for. Because a lot of the times clients don't even know what they're looking for. They may be looking to save more money, they may be looking to invest into real estate, but they don't know what's the best way to get in there. My job is to truly understand what they're looking for.
Mm-hmm.
Once I understand what they're truly looking for, my second job is to understand what their current situation looks like. What does their income look like? What does their credit look like? How much down payment they have saved up, where they're looking to buy. If they already own a home and they're looking to refinance,
Yeah.
why are they looking to refinance? Once I have all of these things figured out, From there, I just do, a standard application that I take them through and, figure out what their situation is like. Once I have all the documents with me, I underwrite the file and I go back to the client with a couple of different scenarios. So I let the clients know, based on what your goals are, these are the few options that you have. This is what the rates look like. This is what the payments look like. This is what the amortization look like. This is why you should go for either option A, B, or C. And then from there, it's the client's decision. Whatever they want to do, they're going to do it. Well, but my job is to educate them and show them like, hey, these are all the options that are available to you. I don't want you to think that, I'm just giving you one option because it's going to make me the most amount of money. Mm-hmm. It's your choice. You get to decide what you want to do.
What's best?
At the end of the day, relationships are currency. Without relationships, you and me, mm-hmm. our business is dead. If our reputation gets ruined, our business is dead. We're not like the banks where if we burn one person, they have another 2,000 people coming in every single day.
And that's I think that's one of the reasons why our tribe, as we like to call it, is the way it is because we like to make sure that our clients are educated. And our job as service providers, in the end, we do provide them the service, is to be their consultant. Just making sure that they have different options and for them to understand these options. There are pros and cons for every approach that we do take, and just making sure that they know the overall picture and they have the freedom to choose, in my opinion, is very freeing. As one of my clients said, you remember we were talking to one of our clients, and he said that this is the freedom of not being forced into something helps you look into the bigger picture. Now, Abdullah, I just want to ask you, there's a lot of concern with the way the market is going now. There has been an increase in interest rates last week. There's going to be a few more as we go throughout the year. So 2022, we're expecting 4 to 5 increases. And I have a lot of questions coming from my clients. Should we switch to a fixed percentage? I have my opinions. I'm not going to share those opinions. You're the expert here. So what do you think the market's going to be looking like in terms of supply, and what do you think about it in terms of how it's going to affect buyers in the short run and maybe in the long run, if nothing's changed over the next couple of months?
So, first of all, you're asking an amazing question. This is a beautiful question. A lot of people are very scared. They don't know what to do, and it's one of those things that this is the first rate increase that happened since 2018, yes. Right? Now the thing is, the Bank of Canada, increased their benchmark rate to 0.5%. And the prime rate for most lenders was 2.45. Now it's going to be 2.70, right? Now what this means is that most variable rate mortgages, their payments are going to go up by 0.25%, and that's like $10 to $12 per $100,000. So it's not an insane amount of increase, right? In terms of people thinking like whether I should go into either a fixed mortgage right now or should I wait, even if I was to get a client in today and they were to ask me, should I purchase with a variable or a fixed? Most of the times I would say, go in with the variable. And the reason is because it's going to take at least, actually I have it written down here, it's going to take at least 5 rate increases for us to catch up to the fixed rate, right? The fixed rate, they're ranging anywhere from 2.74 all the way up to 3.19. Whereas the variable rate right now, you can get something at 1.3%. So the spread is very, very, very high, right? What a lot of the times what clients can do is, if they're truly scared about the, rates going up and them not being able to make their payments, what I recommend them do is I say, hey, go in with a variable rate mortgage, but make it your payments look like it's at 3% interest rate.
Yes.
So they're paying more money to their principal on a monthly basis.
See, now that's the best advice that you can give clients that are worried about the variable or the rate increase. Just do, once you use that strategy and you're smart financially, any kind of increase for the next year or so, even if we reach that the increase 5 times, you're still good to go if you pay that as a fixed 3% every month. Not only are you doing yourself a favor paying towards the principal, but you're not affecting yourself as interest rates go up. So thank you. That's a wonderful, wonderful piece of advice, Abdullah.
100%. And I genuinely don't think it's going to be 5 rate increases this year. I think there's going to be, times where the Bank of Canada is going to review the interest rate, but that doesn't necessarily mean they're going to increase it. Like, again, I don't have a crystal ball. I may be completely
Mine
wrong.
was broken like a million years ago.
I used to have one. I never got one.
There you go.
So basically, I think personally there's going to be 3 rate increases this year, and then there's going to be 3 more the year after. I don't know what things are going to look like after that. After COVID, everything that we thought was going to happen, the opposite's been happening. We don't know where things are going. No one knows. Yeah. But it's our job to, make sure that, we're making the right decisions right now to protect ourselves in the future. Now, going back to, the interest rate example, a lot of times if clients are still worried about, fixed and variable, another thing that they can do is they can take the difference of payment that they would have had with, let's say a fixed rate mortgage and a variable rate mortgage. Let's say it's $400 per month. They can start investing that $400 into an index fund every single month. That can give them a rate of return of, let's say, 8 to 12% every single year. What they can do is, even if they don't increase their mortgage payment, they just put the money in there and they let that money grow over the term of the whole mortgage. And after the term is over, they can, take that money out and they can make a lump sum payment into their mortgage. That will allow them to make their, mortgage go down significantly faster. So, but there's so many different things we can do. It all depends on the client.
That's exactly what I was going to say. There's multiple strategies with different clients. Every client comes with his or her own share of challenges. And I think what our first and foremost responsibility is to make sure that the advice that they get is based on those needs and wants, making sure that they have a financially stable future going forward. So I guess I'm 100% sure you're spot on with the service, the way you think about this. But Abdullah, we are coming a bit tight on the time here. Unfortunately, this has been a beautiful conversation. It's always a pleasure talking to you offline. And now that we've gone online, I think, and I really hope that the people seeing this are going to enjoy their times as well. So, do you have any parting statements to our clients, to your clients, to anybody who's thinking of getting into a new investment or a new home?
The only advice I have is start planning today. Failing to plan is planning to fail. So if you don't truly understand your finances right now and you don't have them aligned with your goals, it's going to be very hard for you to, achieve those goals later down in the future. If you're somebody who's looking to buy a house in the next 2 years, 3 years, 4 years, 5 years, go speak to a mortgage broker. Get some sort of a pre-approval done. Help them understand what your financial situation looks like. If, let's say, it's not the most optimal right now, ask the mortgage agent for advice. What are some things you can do to make sure you can get inside the home as quickly as possible? Maybe that's the mortgage agent connecting you with a good financial advisor who can help you invest your money better. Or maybe if you're having some sort of credit issues, you can start working on your credit to make sure you can get into the market. Or maybe that means, you might want to buy a property out of province so you can start building some equity so you can eventually, use the equity to make a down payment in a house that you may be looking to buy in Ontario. Whatever the case may be, start planning today. Even if this is something you're looking to do sometime in the future, start planning today. That's the only advice I can give you.
That's amazing advice. Abdullah, thank you so much for your time, so much for your advice. And you're spot on with the financial advisors. Actually, Mario, our financial partner, will be joining us on an interview very soon to talk about how we can provide additional services to our client base in terms of growing their equity, while at the same time looking into real estate as a driver for their investments, but at different other channels as well. So we're gonna have Mario on very soon. Thank you for bringing that up. Again, you have been wonderful. Thank you for your time, Abdullah, and we will talk very, very soon.
Thank you so much, Ahmed. I really appreciate your time.
Have a good one. Take care.